Hi, Adam Gower here, and for all of us in the real estate crowdfunding world, we all owe my guest today a big debt of gratitude. Woodie Neiss of Crowdfund Capital Partners was one of the most instrumental people in 2012, actually 2011, 2012, who lobbied Congress to get the Jobs Act passed. His story is actually in my book, Leaders of the Crowd, and you're going to hear today how the impact of that legislation has really changed the world of capital formation for small companies. Woodie focuses on Regulation CF, Regulation Crowdfunding, and his latest study looks at the growth of the industry over the last 10 years and is focused on non-real estate capital formation. So it's a really interesting parallel for everything that we are doing here together in real estate crowdfunding. Be sure to go to the podcast page at gowercrowd.com to get more information about Woodie, his report, his website, and his story. And while you're there, do please sign up for the Gower Crowd weekly newsletter. It's absolutely free and it covers everything that you need to know about real estate crowdfunding, education. We have lists of all the deals that are available, all the new deals that have come out this week. It really is the ultimate guide to real estate crowdfunding, the only platform of its kind on the web, all there at gowercrowd.com. All right, now let's learn something about the other side of crowdfunding, the side that was originally intended for small and medium businesses and startups, all thanks to my guest today. Here he is, Woodie Neiss.
Technically, Sherwood Neiss, but I hope you don't mind if I address you as Woodie.
Go for it.
I'm dying to hear, just give me you are one of the key people that changed the world of capital formation in America. Tell me the story just briefly and tell everyone the story of how you were instrumental in getting the Jobs Act passed before we start talking about your latest report.
Well, entrepreneur, I had started a company by the name of FLAVORx, flavored medicines for children. So they're more compliant, raised 3 rounds of financing, but tried to raise money from unaccredited investors. Mothers loved our product and they always called after the kids took their medicine, said, how do I invest? And I said, you can't, you have to be an accredited investor. I was very frustrated with the fact that there were all these people that wanted to invest in my startup, but they couldn't because of laws that were written 80 years ago. So after we sold that, I sat down with 2 friends of mine from Silicon Valley and we wrote a framework, very much like an exemption to registration, about how you can raise money online as long as you follow a prescribed route. And then we went to Washington, D.C. Naively enough, we went to the SEC and we presented to them. They thought it was cute. They said there's a big building with a white dome over that pointed in the direction of the Capitol. We went over there and naively enough, we just started walking the halls of Congress as well. And we were able to build bipartisan support by just walking straight down the middle of the aisle. We didn't care if you were a Democrat or Republican. We just were there to talk about jobs. And at the time, that's what Washington was buying. So we got a hearing called. The White House had someone at that hearing. They reached out and the ball just started rolling from there. We testified 5 times in front of the House and Senate. And then we were invited to the White House by President Obama for the bill signing ceremony.
For the Jobs Act, really extraordinary, 2012. When did you start that journey, actually? How long before the act was passed?
Believe it or not, it took 460 days only.
That's
460
incredible.
days from when we went to Washington to sitting at the White House. It was one of the fastest pieces of legislation to go through Congress that had nothing to do with naming a street, a road, holiday, that fundamentally changed the securities laws of the United States of America.
What do you think was what really drove that at the time? Because this was right after this was as the economy was pulling out of the Great Recession, isn't it?
I mean, you have to go back in time. You know, local economies were really decimated. And the government was trying to figure out how can we get our hands at the postal level of the United States. And they realized they couldn't. So this allowed them to think, well, if we can create legislation that will let capital get flowing at the community level, then we've accomplished a few things. We've solved the bottleneck for how do we create jobs at a local level. We helped re-energize economies at community level. We've updated these securities laws that people have been complaining about for decades, and we've done it in a way that's prescribed, and there's a regulatory pathway, so we're not going around the regulations, we're working within it.
Once the act passed, tell me about your life after. What happened immediately afterwards? And I'm kind of building up to where we are today, this extraordinary, these findings that you've uncovered and where it's going. But tell me what's been the path since then, since 2012. 10 years it's been.
It's been crazy. I mean, the bill passed. Wiley Publishers reached out to us about writing a book. So we wrote Crowdfund Investing for Dummies. Then the World Bank reached out to us and said, you know, the United States has got a lot of capital, but developing economies need it. So we wrote Crowdfunding's Potential for the Developing World for the World Bank, which is not a dummies guide. And then the State Department reached out to us and said, you know, the government, the United States spends a lot of time and money helping countries around the world. But if we can help promote entrepreneurship, innovation, create jobs, you know, we'll have more people like us. So they hired us. And essentially, since the signing of the Jobs Act, we've been to 43 countries around the world, including Saudi Arabia, where we helped create their entire framework for, you know, securities-based crowdfunding in Saudi Arabia. So we've worked from Suriname to Saudi Arabia. It doesn't matter who you are. The applications for this are global.
That's really extraordinary, and I'm sorry about this pinging. This guy keep trying to turn the thing off, but I can't. I've got this this Telegram app, so one of my guys keeps pinging me. So I apologize for that.
Works.
Now, your focus has been on small business. So what has been the impact on small and medium businesses over the last 10 years? How have you seen crowdfunding really impact that sector of the economy?
Well, there's two ways in which it's had an impact. So keep in mind that the Jobs Act passed in 2012, but it took 4 years for the SEC to come out with the regulations, particularly because the first chair after this passed, Chairwoman White, did not want the legislation to go into effect. And so she delayed. And so we had to wait for a new chair to come in to actually take over. So it took 4 years for the rules to come out. And when it came out, we thought this was going to be instrumental for startups and small businesses locally across the country. And we've seen that, but it's been fascinating to see a couple of things. One, so we built this database that collects information on all companies raising money online, particularly through regulation crowdfunding. It went live when the industry went live, and I'm publishing an annual report that's coming out the end of this month as well. So I can see what's happened with over 4,100 issuers across the United States, almost 5,000 offerings. There's been over $1 billion that has been invested. And we thought that, you know, small businesses and Main Street ones would be some of the biggest beneficiaries. But when you look at the data, and it's fascinating because the data is like a magic ball. Like I sit and my team, and we sit in front of this, you know, these offerings that come in every day. And we literally like, oh my gosh, we can see what the future is going to be like in 7 to 10 years, because we see the seeds of all of these future companies that we're mostly going to be using as products and services down the road. These are all the future VC funded companies that are getting their start now in equity crowdfunding. So it's been fascinating to see the small businesses, your Main Street type of retail businesses, leverage us as access to capital, particularly when it comes to the pandemic. You know, the banks weren't financing with the pandemic. It's become very hard for you as a small business to access traditional capital. So why not go to your customers? Well, this turns out to be a great way in order to do that. So this has solved the problem there. But with startups, what we're seeing is Silicon Valley is sort of disappearing in terms of its priority. You know, you don't have to be there anymore to start a company that can get funded and then raise VC capital later on. So you're having all these great startups that are launching these businesses from Omaha to here in Colorado. Colorado is actually turning out to be a huge place for startups to raise money online. And it's just great to see the democratization of capital across the United States.
That's really interesting. What have you noticed any sectors in particular, talk about small and medium, etc., but any particular industry sectors taking up crowdfunding more than others?
2021 was pivotal for like information technology, software applications. We've seen, and that's where I'm like telling you this magic ball, where I'm seeing all this technology coming into play. It had like a 300% increase in the number of offerings in terms of capital that was committed to those offerings all across the United States. By the way, in equity crowdfunding, there's been offerings in all 50 states by over 1 million investors. So, you know, this is taking place wherever your listeners are listening. And, you know, I think the software application is one of the biggest beneficiaries because we've got so much focus on technology coming out of universities. There's a lot of just interest in it from people that are playing around with it. And I think people are leaving corporations these days thinking, you know what, I've learned a lot from this company, but they're not solving the problem that I want to, the way I want to see it solved. And they're coming up with their own technology solutions that will actually be part of this broader ecosystem down the road too, that are raising money for software technology.
Now, you mentioned regulation crowdfunding is your focus. Just help me understand the distinction between regulation crowdfunding and some of the other components of the Jobs Act, like 506C, Reg D 506C and Reg A, etc. Just kind of paint that picture a little bit. What exactly is it?
So there's 3 parts of the Jobs Act that affect online investment. One's called 506C, one's called regulation crowdfunding, and the other one's called regulation A+. 506C takes place of 506B, and 506B says you can raise money from an unlimited number of accredited investors, and there's no cap on how much you can raise. But you couldn't do general solicitation, meaning you couldn't go out and actively say to people, hey, world, on the internet, on radio, and newspaper, I'm raising money for my company, come invest. 506C lifts the ban on general solicitation, and you can now go out and raise money online from accredited investors. Regulation A+ takes place of Regulation A. Sorry about my cough. Regulation A says that you have to have a qualified offering that is approved by each state. So nobody was using it because you got 50 different states. It's very cumbersome and costly. What Regulation A+ said is you can do an offering and raise up to $75 million, provided that is qualified by the SEC. So you have to go through quite a costly process. It's cumbersome in terms of the bureaucracy that you have to go through with the SEC. But once your offering is qualified by the SEC, you can go out and raise money online from both retail and accredited investors for your company. Regulation crowdfunding sort of falls in the middle ground. It allows for retail and accredited investors. You can only raise up to $5 million. There's an unlimited cap that you can raise, but you have to have disclosures. You have to tell people, you know, about the company, the stock itself, you know, what it's valued at. There's certain things that you have to have in there that are not necessarily prescribed in like a 506C offering.
What are the challenges that people doing, and you focus on Reg CF, correct? That's your primary focus.
Yes. Yeah.
So what are the challenges that regulation crowdfunding, this is kind of this is actually where the term crowdfunding came from, it seems to me, is this Reg CF. It was the core of the Jobs Act, and it's been applied to the real estate industry as well. We'll talk about that briefly in a moment as well. It's like it is crowdfunding, but it's really all about regulation CF, regulation crowdfunding. What have been the biggest challenges along the way that you have observed, both sponsors or issuers, I should say, and investors have to this new form of capital formation?
I mean, the biggest challenge for issuers is the misperception. Like a lot of people think, okay, I can go out and this is like going fishing. You throw your net out there and catch a bunch of fish. You go home and you cook your fish. It's not that way at all. I mean, there's a lot of time and preparation that goes into putting these offerings together. It takes a team. It takes money. You got to spend money to make money. You got to put videos together so that investors can watch it. Offering documents, you're going to need lawyers to review things. You're going to need an accounting firm to go over your financials, most likely. And so a lot of people don't understand the time effort that it takes going into it. From an issuer's perspective. From an investor's perspective, I think it's just a little overwhelming. You know, when the industry first got started, these were local companies raising money from local investors. In the survey, in one of the surveys that we did with the 2021 annual report, we asked people what they, you know, how 2022 is going to look. And it's been fascinating because in our early surveys, like I said, it was local investors investing in local businesses. Now, these investors are investing in industries across the United States. So there's been this fundamental shift that's taken place. And then it gets a little confusing because if you're investing in industries across the United States, where are all these offerings taking place? How do you find out about them? So you're not investing in one platform, you're investing cross-platform, and it takes time and energy on the investor's part to find the deals that they want to invest in. You know, so it gets a little confusing on their end. From the industry's perspective, I'm just surprised that CNBC doesn't cover this. You know, I don't understand why there's not a show that's dedicated to what's happening in this space, because, like I said, these are the seeds of our future. We can see them. We see who's getting follow-on rounds. We can see valuations going up. We can see how these crowd investors are already making, you know, profits. Yes, they're on paper, but there will be exits, and they will be making a lot of money. So I think the media needs to catch up to where the industry's at.
Is the kind of the natural pathway for a Reg CF offering to then go to, I want to say institutional capital, but to venture capital? Is it they build their foundation with the crowd, if you like, and then gain credibility and raise money? Is that kind of typical? Is that what you're seeing?
Yeah, if you asked me a month ago, I would have said yes. But when we ran the survey, one of the questions that we asked to companies that have raised money online, so by the way, by a survey, because it went to our opt-in mailing list. So these are people that know crowdfunding, have probably invested in the company, have launched an offering. So it's self-selective, but it's also highly credible because these are people that understand the industry. I asked the companies that had raised money online through Reg CF, do you plan on going out for another round of offering this year? 95% of them said yes. Mm-hmm. And I said, what type of offering will you do? Well, a traditional VC offering is like a 506B. It's your private with accredited investor only offering. So I had Reg CF, Reg A, 506C, and 506B. Not one of them chose 506B. Every one of them that had already done an online offering was going back to the crowd, going back to their crowd.
That's fascinating.
So this doesn't signal, this is just a signal that these companies realize the benefit of going to the community for financing. It does not replace the capital or the role that VCs will play when a company gets to the stage or the point in their life cycle and growth where they need that capital. Because when, the type of, I raised money from VCs, and you get knowledge and experience from them that really helps you scale. So when you're a small company, you need money to grow. When you get bigger, yeah, you need money, but you need brain power, brain trust. And I think VCs, when you're talking about a crowd, yes, you probably have that brain trust in the community of the crowd. It might be a little hard to pull it out if there's 200 investors, part of your cap table now. But VCs, once they're in, you've got a team of that, from that VC that's got a vested interest in your success. So it's not just about the money once they're in there. It's like, what do we need to do to have you succeed? So it's their brain trust that allows you to really scale. And that's what I found when we brought on VCs too. It was like, we had the money. We were cash flow positive to the VCs anyway. But they really helped us solve the challenges that we had in terms of how do we scale the company. So I think, these companies will use investment crowdfunding to get to the stage where they need more traditional type of financing, but then they'll just go on that pathway and that route. And the beauty about this is, boy, these VCs are lucky. I mean, we've now taken the risk out for them. We've identified who the winners are, we believe are going to be. They've got a vested community of, brand investors that are out there advocating for the company itself. They're doing marketing on behalf of the company. I mean, VCs can't buy the marketing that the crowd can provide. They just can't. But, once you get all these small investors in, they're telling everyone about the investment that they made and why you should buy the product or service of that company. I think that speaks volumes for the business itself. If that's actually translating to direct revenues and earnings for that company, VCs are going to jump on it, particularly if it's a good valuation. If they get in early enough, they're going to be the ones that benefit as well. And you know who benefits even more? Those initial crowd investors.
The investors, exactly.
Right.
So is it, do you see, is regulation crowdfunding replacing seed and angel investing? That
No.
very, very early stage, super early start. Here, I've got a presentation and an idea.
Yeah. I think nothing replaces anything yet. I think this fills a void. There was this valley of death that existed. It was $25,000, $250,000 that nobody saw for before. And regulation crowdfunding really fills that gap. Okay, so now it bridges that gap, but allows you to scale even further. So angels, I think they'll always play an important role. VCs, they'll play an important role. I think crowdfunding comes in sort of in the middle too. If you don't have angels, you can go directly to the crowd. If you got angels, maybe you start with them, then you go to the crowd. You can also just start with the crowd and then go to angels as well. I mean, we're at this phase right now where people are just playing around with everything. You've got all these new avenues to access capital and everyone's using them.
It's incredibly exciting, isn't it? Now, one of the things that you mentioned was education. You got to educate people. So just explain that to me a little bit more. What does somebody who is contemplating raising money using regulation crowdfunding, Reg CF,
right? What
are the most important things that they must keep in mind when they get started down this path? And I'm pointing at education, but tell me more about that.
I mean, I think the best way for someone that's interested in raising money online is just spend time on the platforms themselves. Go to WeFunder, go to Seed Invest, go to Republic, go to Start Engine. They're the biggest. They do about 80% of the volume. See the deals that are on there. Study what success looks like by seeing who's raising the most money on there. Look at their disclosures, and their disclosures are, their business summary, their offering documents, how they do market sizing. It's really important. You can spend a lot of time learning by taking courses on this stuff, but I think the best way to learn is replicate success. So see what the $1 million campaigns are doing, take note of how they compare and differ, see what you like about the ones that are doing it right and raising the most, and translate that into what you need to do for your offering.
Are issuers dependent on the platforms for their raises, or are they also doing their own marketing?
Oh, this is a self-marketing machine. I mean, the platforms play a role, yes. I mean, think about it. They've got hundreds of thousands of investors now. And so once you invest in an offering, you're going to get a mailer, an email about some other offerings that are similar to the one you invested in. So you might invest. But the reality is, when you put one of these offerings up there, you need to actually have a team that's going to be doing marketing for you. So you need to have a cadence related to that marketing. It has to be social media marketing. It has to be email marketing. You have to be communicating with your current customers about what you're trying to achieve. If you've lined up a roster of investors, you need to circle them before your campaign goes live and be like, listen, the reality is the more viral this campaign is from the get-go, the more likely I'll hit my minimum funding target or hit my maximum amount, and I need you to come in from the get-go. So there's a lot of, education awareness that needs to go into the campaign before it even launches, and it's planning of that entire sort of marketing message throughout the life cycle of the campaign.
Yeah, it's a lot of work, isn't it? It's really all about marketing at the end of the day, successfully marketing.
That's right, yeah.
Now, you mentioned that there was no consolidation. One of the challenges for investors is you've got to go to this platform and then to that platform and to this platform. And there's, I don't know how many Reg CF funding portals there are these days. Somebody just asked me and I sent them the FINRA list. It gets longer every day, it seems to me. So is there no consolidation of all this information? And I asked that with, in parentheses, what does Crowdfund Capital Advisors do? It seems like this would be a really good opportunity for you.
We we have a data feed that we provide to institutional organizations like Bloomberg, and it allows them to see what's going on in the space. Yes, they haven't really started covering it with any interest yet, but we think we're on the precipice of that. We are also building out an entire platform that allows people to check out valuations and see, how valuations compare. So if you're putting one of these offerings together, you can price your company in an area where it'll be most likely funded. But you don't want to price the company too high or you'll turn off investors. The consolidation itself, there are a few platforms that are trying to be consolidators for the industry, with Vincent's one of them. But I think we'll get there. Everyone says they want to be the kayak of the industry, but the industry hasn't evolved yet to get to that. And like I said, if the marketing itself is what drives success of these campaigns, it's not going to be the platforms itself. It's going to be the individual campaign issuers that drive the success. There's an opportunity for people to build a fund so that investors can invest in the fund. And if you don't have time to look across all deals, you can then invest in the fund and the fund will make those calls for you. We might be working on something similar to that. I don't know. But there's you've got to think, what has the traditional public markets done, or the traditional capital markets better, that haven't been applied to this segment of the market yet? And if it hasn't been applied, who's going to be the one to do it? And so funds, yes, they're coming. Consolidators in space, yes, they will grow in prominence. So I think as the industry grows, one of the things that we're going to see in 2022 is, last year there was over $500 million that was raised, by over 500,000 investors. By the way, that $500 million was more than was raised in the 4 years prior to that, in just 1 year. So this
Why
year,
do you think that is? Why did the pandemic have that impact, do you think?
The pandemic was great for online investment. When it hit, we saw a dip. So the markets, the online investment markets slacked. And then in March and April, it dropped. But then in May, we started to see it go up, and it's gone up and up ever since. And there's a couple of reasons why. One, traditional capital markets weren't available for companies to raise money. So you had to look for alternative means. And that's what, investment crowdfunding allowed. Two, you had more people that were trying to figure out, is my company going to be around, or do I want to do something else? We've seen this whole, distributed workforce now leaving the workforce altogether to start their own businesses. I think this is the beginning seeds of a lot of those people that are creating businesses that are going out and getting funding now. I think it all plays into the pandemic, created an opportunity for people to go out on their own, for businesses to look for capital where they couldn't get it before. And this is all leading to more investors coming in, more issuers coming in, and the market growing overall.
Why do you think it is that the media has not been taking more interest in this growth, Woody?
We haven't had the big exit yet. As soon as a bunch of average Joe Americans make $1 million by one of these companies that goes public or gets bought out by a big private equity firm, we're not going to get the coverage that we need. But as soon as these people make money and other people are like, wait a second, I can do this, that's when I think the media is going to start to cover it in earnest. So, I see, like I said, in my data, I see companies that have done 5 rounds of financing online. I've seen companies with valuations start at 20 million, go up to 400 million. They did it with investment crowdfunding. They will be bought. Those investors that got in at 20 million will be walking away with very large checks. That's going to be a major national news story.
Fascinating. All right. Now, when you were lobbying for the Jobs Act, we talked about this when I wrote my book, Leaders of the Crowd, of which you are one of them, of course. Thank you, by the way. I should tell you in person, you actually posted a picture of you with the book. That was really kind of you to do that. I was so thrilled and flattered that you did that. Thank you.
If we were at my home office and we were facing back, you would see the book right here.
Thank you. That's very kind of you. But when you were lobbying for the Jobs Act, the concept of real estate. I want to talk about real estate for a few minutes, if you don't mind. And then I do want to talk about your study, your report. It's coming out. It's very interesting. Talk about some of the highlights for everybody. But real estate was not a part of the discussion, was it, when you were in Washington? It just never came up. It's fascinating. It was, when you talk about unintended consequences, usually you talk about a negative impact. But in this case, because every real estate deal starts with a startup, basically you form a company in order to be able to, run a real estate deal. By accident, your work allowed real estate developers to also crowdfund their deals. I mean, it has fundamentally changed the real estate industry. So I'm going to ask you something. Would it surprise? So what you do with Reg CF, we do with 506 B and C. We track and Reg A, strictly real estate. All we do is we just look at the real estate deals. We filter for real estate. That's what we analyze. $500 million in Reg CF. Would it surprise you to know that in 2019, not reg crowdfunding, 506C plus, actually 506Cs and Reg A was relatively minor, actually.
Sure.
There's only a few major players that are using it. But in 2019, $7 billion was raised using 506C. And in 2020, $15 billion for real estate. That's thanks to what you did in parts over there. Would that surprise you? Is that an extraordinary number?
I mean, it's a huge number, yes. It doesn't surprise me only because real estate has been the asset that people have loved since the beginning of time, it seems. And there's a lot of security in the fact that if the deal goes under, you liquidate the asset. You can do that a lot easier with real estate than you can with a startup or a software technology company. So I get that, yeah. And I love it. I think there's a bunch of rundown homes all over America that we could just turn around right now if we just get everyone focused on building these local community rehab centers that are funded by the local community, and we fix up all these bad real estate areas and flip it. Yeah.
Tell me some of the highlights. I've actually got this wonderful email that you sent me. It's what stimulated me to giving you a call. It's amazing. You've got all these charts and maps. And give us some of the highlights of what you've discovered and what folk can discover if they buy your report, which is just, in fact, I'm just noticing now, I should have bought it before. I've noticed the price keeps going up. So you've got to move quickly if you want the bargain price. Otherwise it's going to be, it's going to cost you more money. But tell me some of the highlights of what the report has revealed.
I mean, I think the biggest highlight is, it's past $1 billion in funding, about 1.2 now billion altogether since it launched. Half of that was raised last year, and next year we're going to raise $1 billion more. So you can just see, last year I said that we're at the tipping point. So we're in the tipping point. We're past it now, and I think we're going to benefit from that. We've had about 1,400 offerings last year. I think there'll be 2,500 this coming year. What's fascinating is the success rate in investment crowdfunding is higher than you're going to find anywhere else. So success rate is measured by companies that exceed their minimum funding target. It is last year was 72%. So almost 3 out of every 4 offerings was successful in hitting their funding target. Now so if you're an entrepreneur and you're like, I need money, well, you can sort of feel confident knowing that if 3 out of 4 are being successful, you might be one of those 3. That's great. Now here's the reality: the 1 out of 4 fail miserably, because when you look at the capital that's committed, last year of the all the money that was raised, I think 96% of it or 97% of it went to the funded deals. So the bad deals that were out there, that 1 out of 4, hardly had any money committed to them. So they were poor at marketing, they were poor at execution. It was probably a poor company to begin with. You don't want to fall into that bucket of companies when you're out there. So I think that's a fascinating thing about it as well. Average raises last year jumped to an all-time high of 450,000. Yes, you can raise up to 5 million, but you need to be realistic. You're not going to raise 5 million. You have to scope out what it is that you need the money for and let your investors know that. And I just think we're going to see more intermediaries come into the space. The $1 million plus offerings, we had more of them last year than we ever had. Now we've got several $5 million companies raising money online. I think, we touched on it earlier. We talk about it in the report. Valuations are a key thing. In the report, we dig into valuations by industry. We dig into valuations by region and by state. And so when you're looking at pricing your company, your stock, you need to take all these variables into account because you don't want to be an outlier.
I don't know it's probably an unfair question. I don't know how well you remember all your data, but what are the biggest states? What are the states that have taken up crowdfunding? You mentioned Colorado, but can you think of the states that have picked up on crowdfunding more than any others?
There's logic in markets, okay? The private capital markets, New York, California, New York, and Texas lead in terms of investors investing in deals. Turns out investment crowdfunding, California, New York, and Texas also lead. There's, but you also have a large pocket of individuals there. There's a lot of money there because there's a lot of corporations that are headquartered there. You can't sort of break out from expecting that to be the same. But we're seeing, like Colorado, again, I come back to where I live. It's been fascinating to see Colorado be in the top 10 list. You don't really think of it as a state that's going to have a ton of startups or a ton of investors, but boy, let me tell you, we got plenty of startups and we got plenty of community investors coming in. So I think, if I were a small business association from Iowa, Kansas, North Dakota, I'd be looking at this going, what are the lessons that are taking place from online finance and investment crowdfunding that we need to learn to bring to our state to help stimulate more businesses here or bring businesses here? We don't have to have our entrepreneurs leave. We can help fund them locally, and we can do it with, follow-on funds, with parallel funds, co-investment vehicles by the state to help build these, businesses locally.
10 years, 2012, it's 2022, it's the 10-year anniversary. What's been the biggest surprise over the last 10 years to you? What's like pleasant or unpleasant over the last 10 years?
Well, the biggest surprise is a lot of the people that we started with are not here now. Like we're one of a handful of few people that are just still around kicking in the industry.
You mean people are involved then? That's fascinating, really.
Yeah. It's sort of funny to go back to that first meeting that we had at the SEC. And if you could pick the faces from that meeting to the people that are leading the industry now, you'd see that there's very few left from that original meeting that are still here. which is fine. That's life. Things change and things evolve. I think the thing that I'm most impressed about is the data tells us everything. The data doesn't lie. The data shows that smart businesses get funding. Teams that have raised money before raise more money. Valuations are, 2021 valuations, by the way, skyrocketed over 2020, but that mimics what happened in the private capital, well, with VCs as well. I've been sort of, a fear that I had, I should say. So we were at the White House, this was passed into law, and I was just like, boy, I hope this works. And it's so cool to know that not only is it working, but it's efficient. And the people that were against it, that was baseless lies that they were projecting. That there's been one instance of fraud that we've had, okay? It should have been covered more than it was. It's unfortunate that it happened. We've got more diligence that's taking place by these, platforms now. I'm shocked that when I was pitching this in front of Congress, and I said, how hard it's going to be to pull the wool over 1,000 investors' eyes, that it was true. It's nearly impossible. One instance of fraud in this entire time to really trick all these investors. If anything, the SEC and our government should be saying, what have we learned from these guys? What have we learned from how they created a framework to allow to solve what the SEC stands for? Access to capital and investor protection. Mm-hmm. How can we take what they've built into this framework and apply it to other parts of the capital markets so we can create more jobs, more innovation, get more economic prosperity taking place all across the United States? That's what I would like to see more of. But do I have faith that Washington's going to do it? Let's see.
Are you going to go back and start knocking on doors again? Hard. You learned your lesson that time. 400 and something days of hard slog, right?
I think things are a little different in Washington right now than they were back then.
I think you're probably right.
Yeah.
All right, so let's. I'm going to ask you 3 sign-off questions, but before I do, I'm going to ask you one final question. Let's project forwards to 2032, assuming that we're still around. What are you going to be talking about? What do you think the future holds for this industry?
Well, there's a couple things that will happen. One, this whole part of how do I get started? What do I need to do? Will be systematized so that you as an entrepreneur you're probably going to log on to one place and it's going to literally walk you through the entire process. Your offering is going to go live. Investors are going to be able to look at it from aggregators or whatever. Deals are going to get funded. They will scale. We'll probably have this market intel or this brain trust that'll allow you to grow even better, sort of come together better. So I think we're going to see a lot of standardization taking place throughout the process. I think institutions will be playing in the entire ecosystem. So institutions will be owners of the platforms. They own Wall Street, okay? They will own these platforms. They will own the winners, okay? So once again, we will all be part of the traditional capital market
machine.
Yes, we'll be part of the bigger machine. And funds will play a role in deciding where they want to invest so that the best ideas with the best traction early on can stand the best chance at succeeding.
That's fascinating, Woody. One of the biggest trends that we're seeing in real estate crowdfunding is the increased interest and activity of institutions. Institutional investors are fascinated. And in fact, when you think about institutional investors, you're talking about finance companies, but I think about pension funds, insurance companies, endowments. These are the ones that invest in real estate. Right. When you think about who they are, actually, their money all comes from where? It all comes from the crowd. Right. It's all insurance premiums, pension contributions. It's all essentially it's all coming from the same place. So it's inevitable that these two worlds will meet because ultimately they're founded on the same platform.
Right.
Let me ask you 3 rapid fire quick questions. I've asked you these before. I'm not gonna remind you. I can't even remember what you said last time. It's in my book. I've put a book together about it. Anyway, here we go.
Let's
3
see if they're
final
still the
questions.
same.
Life has changed, right? Especially since these last 2 years. So 3 rapid fire questions. First, Woody, what are your daily habits for success? What keeps you productive?
I am insanely task list focused. So I have checkbox and I have a daily to-do list that is organized every day. And I put the thing with the most pressing priority at the top and what below it, and I check it off that way.
Second question. Over the last 10 years, what has been the hardest lesson you've learned in crowdfunding?
The hardest lesson I've learned in crowdfunding, probably everyone's not as optimistic as I am. You know, I really see and believe the potential of this, and I look at things through definitely rosy glasses that see things in just a very beautiful shade. And there's a lot of people out there that are naysayers and make a living just being critics. And I definitely wasn't prepared for people whose profession is to say no or deny opportunity. And I get frustrated with that when I confront it in the industry.
Yeah, I can appreciate that's one of the hazards when you go to the crowd. You know, there's always going to be the naysayers and the trolls and whatever. Right. It's important to keep your focus on the advocates, isn't it?
Yeah. Yeah.
Last question. Advice for somebody. What advice would you give somebody who wants to go out and crowdfund something?
Spend some time learning, you know. Do some research, go on the platforms, like I said, and see what's going on there. Look at our data that we've got published on our website. We've got public dashboards that you can access to see what's going on. Of course, reach out to us, you know, see if we can help you. But, you know, all this takes a team. You know, there's the beauty about this is it's data driven. The data doesn't lie. The data can tell you what success is. Follow the data. You know, if you've got the right team, which is important, if you've got a business model and customers are paying for that product or service, okay, those are 2 huge check boxes. Capital formation is a necessity. Okay, you want to make sure that you just follow what success looks like there, and you can repeat it. And that's what I would tell people to do.
Woodie Neiss, even though you never thought about real estate 10 years ago plus 400 days, the real estate industry in America owes you a huge debt of gratitude for all the work that you did passing the Jobs Act. Thank you so very much for that and for appearing on my show today. I really appreciate it.
Well, thank you. It was great to be here. And I look forward to seeing you in 10 years and talking about what happened these past 10 years.
Well, let's not wait that long.
Okay, deal.
Thanks, Woody.
That was Woodie Neiss of Crowdfund Capital Partners. What an amazing story. Woody really was fundamentally responsible for getting the Jobs Act passed in 2012. You can read all about it in my book, Leaders of the Crowd. You'll find access to that on my website. Just use the search bar at the very top of the website, or just go on Amazon, where you can find a copy of the book as well. Or you can go to leadersofthecrowd.com. Actually, I think that website's still up. Anyway, Woody, thank you so much for spending your time with me today. It was a real pleasure to see you actually for the first time. I think that's the first time we've spoken on a video call. It's always been via telephone before. Anyway, I really appreciate your time and truly do appreciate everything that you did for the world of capital formation in 2012. Whether or not you had any intention of benefiting real estate, you really did. And it has changed life for a lot of people. Thank you. And thank you also for listening in. I hope you found today's episode as interesting as I did. That's all for today. Be well, stay safe, and for now, this is Adam Gower signing off.